Hello everyone, my name is Advait Italia and welcome to my YouTube channel. This is the daily market update series that I post every day. Today, I want to have two important announcement regarding this channel. So I got a lot of feedback in which you guys asked for the actual, indicators, the actual chart setup and the actual strategy that I use. So I will create a video in which I share you the exact indicators, the exact layout, and the exact strategy that I use. So stay tuned for that, and I will be releasing that video and making that video on the weekend. So stay tuned for that setup in which I will be discussing very important, strategies and very important indicator settings and the exact chart layout that I use and I show you every day. So with that, let's start with the daily market update. So without further ado, let's start with the weekly update. Let's go to the weekly charts and analyze some important developments. So in the weekly chart, as I discussed in the earlier videos, right now we are still into the chop zone. But the good news is we have reclaimed the R1 level. So let me show what do I mean. So as you can see, this is the weekly chart and we have been discussing this chop zone since so many weeks. Now, as you can see over here, we have comfortably, reclaimed the 26-day moving average. We have comfortably closing above the R1 range. Now, remember, this pivot level R1 is on the yearly basis. So if you can see over here, it started from January 2023 and it is still January 2024. So this R1 level to get reclaimed and to actually close above this R1 level is a very bullish sign. So as you can see over here, it is Friday today and we are going to close the week very strong. So we started the week at 14,000 almost 330 level and we are closing around 15,200 level, which is a very big move in just 1 week, if it's concerned. So since we are up almost 6% in 1 week on an index, mind you. So this is a very bullish development. So expect at least a retracement of 2 to 3%, at least 2% next week, and then go higher. Because remember always, any security or any stock doesn't go straight up. So since we have a spectacular closing of this week, expect that, we may retrace around, 2 to 3% and then move higher. So my initial support would be R1. Now, you may know that it is R1, it is resistance. So how come it became support? So in technical analysis, any resistance which is broken becomes a support for the next test. So my support on the weekly time frame would be this one, that is the red line R1, and there are very high chances that next week we touch this R1 and then move forward. So this is my thesis on the weekly time frame, a very bullish development, a closing given by high volume, and we are out of the woods because my biggest fear was if we closed this week on the downside, then there will be a lot of downside to come. But so far it is looking as if we are out of the woods. So kudos to the bulls for holding the 26-day moving average, and we are very nicely positioned for a Christmas rally. So that's my take on weekly time frame. Now let's jump on to the daily time frame. So in the daily time frame, I want to discuss few key important things that are pivotal moving forward. So the first thing that I want to discuss is bulls needs to hold the 50-day moving average at any cost. So let me show you what I mean over here. So as you know, in my charts, the 50-day moving average is the cream line, that is this one. So in order for us to have a sustained rally, we need to hold this cream line, that is the 50-day moving average. So next week, it's going to be very crucial for the bulls to not give away the gains that have been made this week. So like 2 to 3% retracement is completely fine and understandable, but the moment we lose and close below the 50-day moving average would be a very bearish sign. So the gains are astronomical if you ask me on a weekly basis, but if we can survive somehow above 50-day moving average on a closing basis, that is on a closing daily basis, and also if we can be in this chop zone. So what I did is I took a recent high and I took a recent low and I plotted the Fibonacci retracement diagram, you may call it as indicator. So what I found is the 0.5 and 0.618, that is this zone right here, is the golden ratio. So as long as we stay at least in this golden ratio range, or as long as if we stay above 50-day moving average, that would be considered very, very bullish. Even if we chop for 3 to 4 days and then we move forward, then even that would be a very, very bullish sign. Now the issue is, as you can see, if you zoom out and if you look at a holistic daily time frame that is starting from July 17th, then you can see over here that we have been making lower highs every time. So this is a high, this is the lower high, this is the lower high, this is the lower high. So what I did is I plotted a trend line that is this red line. So if you can see over here, this trend line exactly correspond to the zone that I mentioned earlier over here. So if we, test this trend line, and if we can somehow close above the trend line, then that would be a bullish breakout. But for that to happen, we need to digest these gains that have been made in the last week. So markets might consolidate, or market might chop in the zone that is this one, and then give us the breakout. So in the daily time frame, it is very important for us to keep a close eye on two things. One is the golden ratio, and the second is the breakout above this trend line, so that we can be conclusively sure that, okay, this rally has actual legs and this rally can be trusted. So this is my take on the daily time frame. The other thing that I wanted to emphasize in detail is this 200-day moving average. So God forbid, and let's say some black swan event happens, and let's say market gives up the gains, then what is the first order of support? The first order of support still remains this green zone. Let me highlight that for you. So it is this zone. So once, if market tries to lose, these gains, then the first order of support is this zone. So we are, as traders, we should be prepared for both upside and downside. So on the upside, let's say we consolidate for a few days, and on the upside, the my initial resistance would be R1, that is the monthly pivot level over here. And the support zone, as I said, still remains the same, that is this green zone. I will elongate this for you. So keep a screenshot or make sure these levels and take informed decisions based on this. So in the daily time frame, these are the 3 points that I wanted to discuss, which is important. And then I will also discuss the macros after the analysis section. So let us jump on to my favorite section, which is the intraday time frame, and let us analyze my key learnings and how could we have taken a lot of advantage of such days. So let's go to the charts and I'll tell you exactly what happened. So over here, as you can see, I want to highlight one important thing. Remember, yesterday I talked about the data releases, that is Apple earnings and the non-farm payroll report that was going to released in the pre-market session before 1 hour. So this is exactly why I announced and I warned you guys about the pre-market session. So as you can see over here in the news section in the trading view, you can see over here on 5:30 we had the news data release of the non-farm payrolls, and look at exactly at that time what happened. So this is the 5-minute chart, and let me show you. So I have pre-market data over here. So this is exactly the 5:30 candle, that is the 5-minute chart, and the non-farm payroll data release got reported. So you can see in the first 5 minutes of the 5:30 time, we got a candle, a 5-minute candle, mind you, of 100 points. So as you can see over here, here you can have the entire statistics of the candle. So the fundamental reason what happened is non-farm payroll consists of all the other jobs which are apart from the farming and the actual farming industry. So everything, the blue collar jobs, the actual economy gets reported under the non-farm payroll data. So it is very important for the market participants like us to see that the non-farm payroll came in very weak. So if the non-farm payroll number came in very weak, then why the hell the market went up? This is why it is important to study the macroeconomic policy. So since the non-farm payroll came in less than expected, that is, less numbers, that means the economy is slowing down. That means people are having less jobs, and that means Fed is going to have to soften the tone at some point, seeing the economy slowing down. So if Fed softens its stance of raising the rates, then guess what? That is bullish for the markets. Why? Because if Fed starts cutting the rate, if Fed sees the cracks in the economy, then it will start cutting the rates. It will not hold on to the higher for longer narrative that it discusses. So cutting the rates or preemptively keeping the rates high, that's the reason market was anticipating such data releases. So once we see a crack in the economy, that gives investors confidence that Fed is not going to be as hard as it is saying it to be. So that's the fundamental reason why the market went up. And now let's jump on to the actual intraday trading analysis. So as you can see over here, right after the bat, we had a very strong opening, right? We gapped up after a 5 days of rally, after the 4 days of rally. So I was very, very, cautious. And also I was very, very, speculative, like why the hell is the market going so up a lot? So what I did was I waited for the levels to get confirmed. So my first thesis is I don't trade for the first 30 or 45 minutes of the day. And the reason is pretty simple. Market establishes a trend after mostly 30 to 45 minutes. So I was waiting for that moment. So this is the opening at 6:30. So I was waiting for the moment. Since it gapped up, it was hovering near the R1 level. So I quickly realized that at 6:40, it actually breached the R1 level. So I was very curious, like what's going to happen next. So I waited till 7:30, and I saw that okay, it is hovering around R1 level, but it is not giving me the bearish crossover, that is the 5 and 26-day moving average. So I was still curious, okay, it has to either conclusively give me the crossover, or it has to sustain this chop zone and then go ahead. So if you can see over here, the moment we conclusively broke above the R1 level, that's when we had a lot of room to go to R2. So over here, as you can see, once we reclaimed this R1 level over here after chopping around for at least half an hour, we had straight up ahead till the R2. So R2 was, this level was a big resistance, and let me show you why. Because on the daily time frame, as you can see over here, we are still chopping around the Fibonacci golden ratio of 0.786, that is this one. So guess what? The R2 level corresponds to the same level that is over here. So as you can see, the R2 is 15,180. And guess what? The 0.786 level is 15,186. So there is a lot of confirmation that you can take from the daily time frame and that you can apply on the intraday time frame. So both are resistance. R1 is also resistance, R2 is also resistance. But the reason why I preferred R2 is because that was the upper band of the Fibonacci ratio. So you have to also realize, and with experience, that which resistance level you should trust. So the probability of the resistance level holding on is going to the higher time frame and seeing where is the extreme end. So when you analyze, this is why on this channel I analyze multi-time frame to get the clues as to where the most extended side is, and then taking the informed decision. So over here, you could have taken a good shot for 15 to 20 points on the futures contracts and got out. Or you could have taken a long over here when we didn't get the bearish crossover. The moving averages were, riding high. So you could have taken a long call over here. So this is the way, intraday trading works. Like you have to combine a lot of, multi-time frame analysis, and then you have to take an informed decision. So getting in is one thing and getting out is other thing. So if you see your position, going into your favor, then have a trailing stop loss or have a trailing target. So after 10 to 15 points, it's very important for, especially for the futures traders like me, to get a trailing target order of 10 to 15 points every day. That is a pretty good deal, because if your position size is more than 3 contracts, then you would make a reasonable amount of money for sure. So this is my take on intraday analysis. Also, there was one more confirmation from the VIX side. So let me show you what was VIX doing today. So the VIX, as you can see, it made lower highs and lower lows. So if you see over here, it started at the S1, that is the S1 support zone, and then it was just going lower. It tried to reclaim the S1 level, but it was not able to. And the best indicator is it didn't give us a bullish crossover. So if VIX is not giving a bullish crossover, that means the volatility is decreasing. If the volatility is decreasing, then there is no room for us to go short. For us to go short, the volatility has to shoot up. So this was one other thing that I observed on the intraday of the VIX. Now let me show you one important thing on the daily time frame of the VIX. So if you go to the daily time frame, yesterday I mentioned that VIX may take a support on the lower end of the Bollinger Band, and that's exactly what happened. So this is the lower end of the Bollinger Band that you see, 1869, and guess what, the VIX is right now almost poised to close at the lower end of the Bollinger Band. So this is how I determine. So when you trade, it is very important to get multiple data inputs, and then having a confluence, having more and more data to support your thesis, so that when you take the trade, you become a lot more confident since you have the data to back it up. So this increases your probability of success immensely. So just to give you this analysis on the VIX. So this is the daily update, and I covered the intraday update on VIX. So now to summarize it all, my summary for today is just the markets need to sustain this golden zone that I said, and also it needs to close the next week for about the trend line that I discussed over here. So once that happens, we are perfectly nicely positioned to have a Christmas rally. But always be cautioned and always be warned that if that doesn't happen, then the support zone is this one, and the ultimate support is the 200-day moving average. So stay tuned for a lot of updates. Be prepared for long and short, both sides, and make informed decision. So with that, I would like to thank you for watching the video. Feel free to like, share, and subscribe.